Okay, you guys, so here's a quick macroeconomics thing to learn. So today the non-farm payrolls came out, okay? And they will say we added jobs, so the labor market is strong, therefore we're not in a recession. Okay, so these are jobs they're saying were added to the economy, right? Job market is strong. Over here, you have what are called continued claims. So these are people that have not been returning to work. And you can see that since June to July, there's a rise in continued claims. Okay. And so you can see this upward trend in people not returning to work. Okay. Now, right here, these are initial claims. So these are people who are starting unemployment, since, let's say, since June. So the people who started to file for unemployment since June, that number has come up. Okay, so what you're seeing is a trend, this macro trend, where you have a uptrend of continued claims, people not coming back to work after a prolonged period of time. They're living on the unemployment, and at the same time you have a rise in initial claims. Okay, and then over here you have this rise in what they're calling a strong job market. So common sense, just think it through for yourself. If you have more initial claims, people who are claiming unemployment for the first time, at the same time, you have a rise in continued claims, people staying on in unemployment. If we were to look at it as the whole, like a whole pie, right? What's happening is more of these jobs are being added to one half of the, or jobs are being added to one half of the pie, but at the same time, on the other half of the pie, you've got more initial claims and more claims of people staying on unemployment. So in a recession, what they talk about is how this piece of the pie starts to grow, right? And you start to lose the jobs being added, and then you end up with this, basically this part being filled in, this pie being filled in, and then that's the contraction you see. Okay, so that's important to understand. And right now, when we talk about how long is a recession, you have to remember that until the jobless numbers, until this non-farm payroll starts to come down and people start to actually lose jobs, then the administration, because it's a bad look, they're not going to come out and say that we have a recession. And so how the market reacts is very predictable, and if you've not traded, then you wouldn't really understand this. But so a lot of people would think that a strong jobs market would mean that the market would rally. The market would like that because people, it seems like a strong job market would be good. But in the conditions we're in right now, we need the contraction. The market needs a contraction in the jobs market because they need the cheap money back. And until there's a recession, and until the Fed starts to cut rates, which they're not going to do as long as labor continues upwards, and as long as there is a strong job market, then they're going to continue this path of raising rates. Okay, so that's what to understand about what's going on today with this jobs market info.